And if you do that, I promise you guys, you will never ever blow your account. I promise you that you will never blow your account. Yo, my people, welcome to another video. You guys have been requesting me to show you guys a risk management strategy, how to manage your risk to prevent your accounts from blowing. Some of you guys have been sending me private messages in my DMs asking me how to manage an account, to prevent it from blowing. So in today's video, I just wanted to show you guys what you can do, or talk to you guys, or tell you guys what you can do to prevent your accounts from blowing, and how you can manage your funds and keep growing them as you make withdrawals, as you spend, and all that kind of stuff. So I don't want to take so much time making introductions. You guys already know. If you've been watching the channel, you already know. Remember, give a like and also subscribe if you're not yet subscribed to the channel, so that you don't miss any of the valuable content that I'll be bringing guys up in the future. So to dive right into it, I want to give you guys an example with a $1,000 account. If you have $1,000, how you can manage your risk to make sure that you don't blow that account. So what I have seen through the years of trading is that most of the people who come into trading want to grow their accounts so fast based on what they see online. Now that is a wrong way to go. If you really want to stay in the game for quite some time, what you have to do is you have to manage your risk. It is said that the best trader is the trader who learns risk management, is the trader who learns how to manage his risk. Because before you ever become profitable, you have to master risk management. Risk management is the #1 killer of traders. Most of the traders who come into the market with the wrong mindset, and then they over risk their accounts, over leverage their accounts, use a very big lot size. For example, with $1,000, they start using like a standard lot size, 2 standard. Some people have even seen them using 10 standard lots on a $1,000 account. So you end up finding your account a margin level percentage. You find the margin level percentage of your account dropping below 100, below 200. With that kind of risk, you find yourself at a very high risk to your account. So in today's video, I'm going to talk to you guys about margin level percentage, lot size, and also position sizing generally. So I'm giving you guys an example with a $1,000 account. Most people, as I was telling you, when they come into the market with $1,000 or $100, whatever amount you come into the market with, they start to trade without following proper risk management. Now, how do you manage your risk? You manage your risk by calculating the correct lot size for every account size that you trade. For example, with $1,000, if you want to risk, say, 2% of the account, which I do recommend you to risk, don't risk more than 2%, unless if you want to be aggressive. If you want to be aggressive, don't exceed 5% of your account per trade. Just risk 2%. That's what I recommend, 2% or 1% if you have a very big account. If you have an account which is a moderate, risk 2% of your account. So with $1,000, for example, you're risking 2%, that is $20. 2% of $1,000 is $20. Now, what lot size do you use when you're risking $20? Now, the lot size is not determined before you determine the percentage of risk you're going to put onto your account. Okay, so after you've known that you're going to risk 2%, which is $20 of the account, then now you can go and use a position size calculator. You can download those apps. They are on the Play Store and also the Apple Store. You can download them, or if you don't want to download the apps, you can just use babypips.com/position size calculator. Then put in your account balance, say $1,000. After you put in that, put in the risk percentage, for example 2%, and then you choose the currency pair you're trading. It will normally calculate it for you automatically. That is the way you go. Now, the second way you can determine your risk is by looking at your margin level percentage for the trades that are running. This method is mostly used, or I use it mostly when I have running trades and I want to scale into the trade or add in more positions, look at the margin level percentage on your account. If the margin level percentage is below 1000, your account is not at a good risk. You should try to keep your margin level percentage above 1000 or at 1000, so that you can have room to take more trades if you want to take more trades. But keeping your margin level percentage below 1000 will allow the market a very small space to swing, mostly if you are position trading or you're swing trading. If you're scalping, the margin level percentage may not matter so much, though it also indicates the exposure you have within the market. So learn to take care of your risk management by using correct position sizing. Use the correct lot size for any given account size. Normally in my mentorship program, I teach people how to use this this method that I'm going to tell you guys, and this is how I teach them. I'm not going to tell you everything, but this is just part of it. When you're taking trades, normally try to take trades in this format. If you have $100, start with a 0.01 lot size and take only one position, not two, just one. 0.01 for $100, 0.02 for $200, for $300 as you go. $1,000, you can only risk a 0.1 lot size. So a 0.1 lot size is what is suitable for $1,000. If you trade with a $1,000 account and use 0.1, you will see that your margin level percentage will be more than 1,000. If your leverage, for example, is a 1 to 200 or more, you will see that your margin level percentage will always be above 1,000, sometimes to even be 2,000, 3,000. There, your account is very safe. Even if there is news or the market changes, you will see that there will be no big effects to your account negatively. So try to use that formula. It's very simple. If you have a $200 account, use 0.02 lot size. Total running trades should be 0.02. Okay, if it is 400, use a 0.04. If it's 500, use a 0.05. And if you do that, I promise you guys, you will never ever blow your account. I promise you that you will never blow your account. If you just trade with that criteria, your account will always be safe, your margin level percentage will be high, and you'll be able to scale into positions if you want to add in more positions. So I am not going to take too much on this video because I don't want to make the video too long. You guys were complaining that the videos sometimes are too long. But remember guys, if you want me to go into details with this, drop a comment down below. Maybe I'll come back and explain something else in the next video. Join the free Telegram. I also post their free signals which are profitable. Generally, if you look at them, they're profitable. We've been winning. Yes, we lose here and there, but we've generally been winning. And also, please, if you want to trade with the broker that I use, also join the broker that I use by registering with the link that is in the description down below. When you do that, of course, I'll get a small commission and you help the channel to move on. Thank you guys for watching. Until next time, peace out.